Hi everyone, welcome back to Corporate Decoder, the place where we dive into the exciting world of corporate filings. Today we're cracking open an 8K report from Biologics Corporation, and spoiler alert, it's about their stock price doing a little dip. But don't worry, we'll break it down so even your grandma understands it. Biologics just got a heads up from Nasdaq, the stock exchange, saying their stock price has been hanging out below the minimum $1 per share for too long. This is like a kid being told their grades are slipping. Now they have to pull up their socks or face being kicked off the playground, or in this case, delisted from the stock exchange. Let's dig into what this means for the company and its investors. This report is a Form 8K, which companies use to tell investors about big, important stuff happening. It's like a corporate breaking news announcement. In this case, the breaking news isn't exactly celebratory. The heart of the matter is that Biologics' stock price has been below $1 for 30 business days straight. Nasdaq requires companies to maintain a minimum bid price of at least $1 per share. Think of it like a minimum wage for stocks. If you fall below it, you risk getting delisted. Now they've been given a grace period, basically extra time to get their act together. They have until October to get their stock price back above $1 and keep it there for at least 10 consecutive business days. If they can manage that, they're back in compliance and everything is fine. It's like getting a warning and having half a year to improve before facing consequences. If they don't manage to get back above $1, Nasdaq could decide to delist the company's stock. Delisting means the stock would no longer be traded on the Nasdaq exchange. It's like being kicked out of the club. But the company can appeal this decision to a Nasdaq hearings panel. The company's stock is still listed on Nasdaq for now. Nothing changes right away. They're trying to figure out what to do. The most likely option is to ask the shareholders to approve a reverse stock split. A reverse stock split is like taking a bunch of small bills and exchanging them for a smaller number of larger bills. For example, a 1-for-10 reverse stock split means that every 10 shares you own will be combined into one share. This reduces the number of outstanding shares and, in theory, increases the price of each remaining share. It is a tool that companies use to artificially increase the price of their stock and meet requirements. Here, Biologics acknowledges that they might not be able to meet the requirements to stay listed on Nasdaq, like a student acknowledging they might fail the class. They mention that it depends on many things, which we will talk about. Now let's be real. This situation isn't ideal for Biologics. A stock price consistently below $1 can scare away investors. It also makes it harder for the company to raise money or use its stock for acquisitions. On the other hand, it is just a stock listing notification. It doesn't change the underlying value or technology of Biologics. It only puts it at risk. There are still a few important details we should dive into and put things in perspective. In order to do that, we should look at the previous 10K report from the company and find some numbers. The latest 10K report we could find was from 2023. The report contains a section regarding the company's cash position and ability to continue as a going concern. We should definitely pay attention to that. It says that as of December 31st, 2023, the company's cash balance was only $142,100, and that combined with other factors raises substantial doubt about its ability to continue as a going concern. Also, the net loss attributable to common stockholders was almost $17 million. This means that if they continue burning cash like this, they will run out of cash in less than a year. They spent around $6 million on research and development, which means they are betting on new products. However, they need to raise more money to continue those activities and remain afloat. This situation with Nasdaq is a symptom of the underlying challenge, which is the company's financial health. They're burning through cash and they need to either generate revenue or secure additional funding to stay afloat. If they can't, the reverse stock split might only be a temporary fix. A trade risk, so what's the outlook for Biologics? The situation isn't great. The company needs to turn things around quickly. The first and most important thing is to get the stock price above $1, as that will reduce immediate pressures, so they need to show they can be profitable. Right now, the numbers are not looking good. They need to be responsible and lower spending and focus on what works. While Biologics has potential, it faces significant risks. Investors should carefully consider these risks and do their own research before investing in this company. The next few months will be critical for Biologics, and their ability to regain compliance with Nasdaq listing standards will be a key indicator of their future prospects. Thanks for watching. If you found this breakdown helpful, please like, comment and subscribe for more corporate deep dives. Let me know in the comments what company you'd like me to decode next.